Hey traders, Raghee here, and today we're going to talk about something that I think far too few day traders contemplate, and that is, where does the daily time frame fit into your trading strategy? If you're looking at even a 5, 3, 2, 1 minute chart, where does that daily fit in? And I think the S&P and the Dow really tell this story so powerfully. When you're day trading, you've still got to understand where you are, kind of a lay of the land. You know, are you at the edge of the boundaries of major levels on the daily or not? You know, to be a day trader down in this area, it was easier to have a bullish bias. And I've spent quite a few videos talking about why, as a day trader, I think you still have to wake up and pick a side. You still need to know that there's a certain side where the wind is at your back, or that's the flow, the overall flow of the river. So inside this area, all through in here, it's easier to just kind of be neutral, because on any given day you can be up or down, as you can see with these candles. But when the candles actually reach one of the levels that becomes an overbought level or becomes a resistance level, you know, it's a resistance level not because suddenly today it was the high. It's a resistance level because we've either reached a Darvis level, a psychological level, a daily price movement level. We've reached the 34 EMA on the low. Every one of those levels that I just taught you are explainable each within 5 minutes. They're that simple. They're that objective, and they repeat that often. Again, levels like a Darvis, psychological, 34 EMA on the low, daily price movement ranges. They're objective, and what makes them such powerful levels is just the fact that their simplicity and the repeatable nature of how you find them makes them, I think, increase confidence in traders, because rather than being hung up on whether or not you drew the right line or level, you can focus on trading. It's a difference between, you know, having something automated for you, which is great, or having to do things manually, which requires a degree of skill. Having both in your wheelhouse is great, but the automation is what shortcuts what we do at Simpler Futures, in that I try to take tools and indicators that don't require you to have 30 years of staring at these price charts to go, oh, that's an actionable level. All right, so enough of that. Let's get into why this was so important and why in the latter half of the day, after we hit basically 2650, everything changed. One, it's a major psychological level. That's one thing. And today's high, by the way, as you can see here, was 2653. Let's go to a 5-minute chart and talk about what happened when we hit 2653. And you see it pretty clearly. It happened right here. We know that that was what? That was that daily resistance level, that daily resistance. So once we hit that daily resistance, am I surprised that shortly after we traded lower, as that daily correction likely woke up a lot of offers, a lot of sellers. There was a wall of resistance by way of sell orders, and you can see what happened. Now, in fairness, the weakness that we saw that happened had a lot to do with the news, with the FBI raid of the president's personal attorney. That was the speed at which all this happened, for sure. But the fact that this triggered up here had a lot to do with price action, had a lot to do with, I think, the technicals as well. And then the speed of the sell-off, I think, had a lot to do then with the news, the fundamentals. Same thing with the Dow. And this is a dangerous thing for momentum traders. You know, if you're a trader who likes momentum and you start to see higher highs here, you're thinking, all right, this market's off to the races. Remember where those higher highs may have carried you. In this case, it carried us right into a level that we sold off before. Sure, we could carry a little bit higher, but I'm still looking for resistance to kick in and send this market lower. Just like if and when we end up down here, we will look to buy again, because that's what we did the last time we were down here. So you can see it's almost like a vice grip. You have this market kind of squeezed by this and squeezed by this. And when you're at the edge, as we like to say, your edge, your advantage is at the edge. I'll see you in the next update.